Good day, students. This is Professor Alexander Buchholz coming to you with our Chapter 13, which is the overall audit strategy and audit program. So again, several different learning objectives here. The first learning objective is to use the 5 types of audit tests to determine whether the financial statements are fairly stated. Objective 2, select the appropriate types of audit tests. Objective 3, understand the concept of evidence mix and how it should be varied in different circumstances. Design an audit program. Compare and contrast transaction-related audit objectives with balance-related audit objectives and presentation and disclosure related objectives. Understand key evidence related terms. Integrate the 4 phases of the audit process. The first objective. Using the 5 types of audit tests to determine whether financial statements are fairly stated. So again, when we are looking at how to do our audit, we're looking at risk assessment procedures. Auditors use the results of risk assessment procedures to determine the type and amount of further audit procedures necessary to form an opinion on the fairness of the financials. Again, in English, what this means is that auditors have to assess where in the financial statements are the most risk, because the areas that have the most risk logically should be the areas that we're spending the most time on. If it's something that is immaterial, we really don't want to spend too much time on it because, again, there really is no logical reason to do so. And in order for us to do these types of risk assessment, we are then going to decide post-risk assessment, what types of audit tests do we want to do? Could be test of controls, substantive tests of transactions, substantive analytical procedures, or tests of details of balances. So the first thing that we want to take a look at over here, once again, is that audit risk model. Very important for us. So again, that audit risk model is the key. When we look at audit risk model, again, we're taking a look at the concepts really of audit risk, which again equals inherent risk times detection risk times control risk. That's the audit risk model that we pretty much go from, which will tell us, based on our assessment of inherent risk and control risk, how much testing do we need to do and the type of testing we need to do. So the first thing we will look at, the type of test, could be a test of controls. So to obtain sufficient appropriate evidence to support a reduced assessment of control risk. So again, control risk is the possibility that the client's internal control will not detect a material misstatement. So some of the ways that we can assess control risk below the max would be as follows. Number 1, make inquiries of appropriate client personnel. Examine documents, records, and reports. Observe control-related activities. Reperform client procedures. The amount of evidence needed for tests of controls really will depend on 2 things. Number 1, the extent of evidence obtained in gaining an understanding of internal control, and the planned reduction in control risk. So let's take a look at this particular role of test of controls. So let's take a look for a moment at some illustration of test of controls. So for example, credit is approved automatically by the computer by comparison to authorized credit limits. This is a key, please note the word, key control that we as the auditors have assessed from our client. Now your client may have 300 controls, doesn't mean they're all key controls, doesn't mean we should be testing all those controls. So a test of control that we can do here would be use test data to determine if the computer system automatically approves transactions below an authorized credit limit and rejects transactions above the authorized credit limit. Kind of put some test data that we know could be wrong and see how the computer responds to it. Another one, sales transactions are internally verified. Let's examine documents for internal verification. Other type of tests that we do when planning an audit. Substantive tests of transactions. Again, these are used to determine whether all 6 transaction-related audit objectives have been satisfied for each class of transactions. So again, we're talking about substantive tests. Think of the S, think of the dollar. You're looking at dollars, you're looking at invoices, vouching. You're not looking at test of controls now, you're looking at pure vouchering. Substantive analytical procedures, again, they are not required. They're only required at the beginning of the audit and at the end of the audit. So, although it's not required, substantive analytical procedures can still be used to audit an account balance. The 2 most important purposes of substantive analytical procedures are, number 1, indicate possible misstatements in the financials. Number 2, provide substantive evidence, again, dollars. When we look at test of details of balances, usually we're going to do that on your balance sheet accounts. We're going to look at a bank account, accounts receivable, prepaid expenses, investments, balance sheet types of accounts. The second objective. Select the appropriate types of audit tests. So how do we decide what type of a test to use? Well, the answer, I hate to tell you, is it depends. First of all, we want to look at availability of the types of evidence for further audit procedures. Even though we may want to do a certain test, it doesn't mean that your client may be able to do that particular test. The relationship between further audit procedures and the types of evidence, again, we do summarize them in the next table. We also want to take a look at cost benefit to us. Now, that's a very interesting statement we're making. We want to do a very good audit. I will tell you this right now as a professional and as a practitioner, we want to do a good audit. However, what you're going to find, ladies and gentlemen, is the partners that you work for want to make profit. Again, they want to be ethical, but they want to make profit. So therefore, if you're the type of auditor that wants to audit everything and who isn't somebody that does you want to audit everything and not look at the concept of materiality, well, that's not a very good business decision. So, we want to look at doing our audits, doing them effectively, doing them efficiently, and looking to see which tests will cost more, which tests will cost less. The type of tests we do increasing in order, again, the cheapest to the most expensive. A substantive analytical is a cheap test. We're looking at a balance, trying to get it to be as close to the balance as possible. Looking at it, last year expenses were $100,000. This year they're $102,000. Why did it go up? Cost of living. That's a fair answer. Next, risk assessment procedures, which we spoke about. Test of controls. Looking to make sure that the test of controls are operating effectively. Very good approach, used in a lot of audits of publicly traded corporations, but very expensive. Substantive tests of transactions, test of details of balances. Again, why are they expensive? Because now we're looking at invoices, we're vouchering, we're tracing, we're doing more and more legwork. More and more documentation. If we're doing more and more, we're charging more time to the job, therefore costs are going upward. So usually what managers will do and partners is they'll sit down together and try to figure out what's the best approach that can be used in order to get this done effectively and efficiently. Because you're going to see that if you are a client and you have a deadline, you don't care about your auditor's costs and procedures. You just care that they get it done, and they get it done timely and correctly. So again, what type of test do we perform? Relationship between test of controls and substantive testing. So again, when the test of controls show you that you have a deviation that lead the auditor to believe there may be material misstatements, the auditor needs to perform substantive tests. So again, if control risk is not good, if we're assessing controls at risk at the max, we cannot trust these controls. We need to do a lot more testing substantively to make sure that there's no material misstatements. What are the relationships between substantive analytical procedures and other substantive tests? Analytical procedures only indicate the likelihood of misstatement. Unusual fluctuations indicate an increase in the likelihood. So again, when you're doing a substantive analytic, that's only going to tell you there could be a misstatement. It's not going to actually confirm it. Trade-off between the test of controls and substantive tests. Again, auditors have to decide how we're assessing control risk. If we're going to assess control risk below the max, which is sometimes a great thing, means our clients have good controls, well, in that particular case, then they can do testing of controls for operating effectiveness. The third objective. Understand the concept of evidence mix and how it should be varied in certain circumstances. Evidence mix. The types of evidence chosen and the extent of use by the auditor varies widely from audit to audit, which is based on levels of internal control effectiveness and inherent risks. So 4 different audit scenarios are shown on the next page with the evidence mix that the approach is that they're going to be taking. In the first audit, you'll notice that there's extensive use of test the controls? Well, take a look. If there's a great deal of use of test the controls, notice how we've done a small amount of test of transactions. We've done a small amount of test of details, but we've done a lot more analytical. Go to the extreme where we don't test controls, none. Lot more detail testing with substantive test of transactions and balances. A lot more analytical. So again, the evidence mix really is dependent upon that assessment of internal controls. The fourth objective, design an audit program. If ever you've been to a particular theater, you know that the way they do their shows is in different acts and different stages, and they have a program. And this program tells you all the things that are going to be happening. Well, we do the same thing in auditing. We have an audit program which tells us step by step what we are going to be doing. And basically, once we have this audit program, it's going to tell us all the objectives that we need to accomplish and how we need to accomplish them. So again, when we're looking at our audit program and methodology, we want to understand those internal controls. We want to assess the planned control risk. We wish to determine the extent of the test of controls, design the test of controls and substantive tests of transactions to meet the transaction-related audit objectives, and then, of course, figure out procedures, sample size, items to select, and timing. The design of the audit program. So, test of controls and substantive tests of transactions. So, when we design these tests, auditors emphasize satisfying the transaction-related audit objectives. Auditors follow this four-step approach to reduce assessed control risk. So, basically, they look at the transaction-related audit objectives to the class that's being tested. So, again, we've seen transaction-related objectives before. They'll then look at the key controls that should reduce control risk. They'll then develop appropriate tests of controls for all internal controls that are used to reduce the assessment below the max, the key controls. For potential types of misstatements related to each transaction-related audit objective, design appropriate substantive tests of transactions considering deficiencies in internal control and expected results. Design of the audit program. Substantive analytical procedures. Most auditors do use substantive analytics, but it's very important that when you do that, you understand what it is you are analyzing. What you must do when doing this step is develop an expectation. So if you believe that you have 100 students in a classroom and you charge them $10 tuition, you would hope to see $1,000 on the general ledger. If you do your test and you see there's $10, then there's a problem that the client needs to explain what happened. Tests of details of balances. The key decisions that are involved in designing tests of details of balances. We identify what risks and what material misstatements there could be. We set our performance materiality. We assess control risk for whatever cycle we may be testing. design and perform test of controls, design and perform substantive analytical, and design tests of details of accounts to satisfy balance-related objectives. The level of disaggregation of planning activities, and again, depending on how you're doing an audit, there could be a variety of steps. So, an illustrative audit program, again, the standards require the auditor to use a written program. This is a program which is, electronic, and basically details each step you're doing, who did it, when did they do it, where can it be found in the work paper file. If a lawyer or judge comes on the scene and says, you did this step in the audit program, where did you document it? If it's not there, the standards automatically ding you saying you didn't do it. Objective 5. Compare and contrast transaction-related audit objectives with balance-related audit objectives. The relationship of transaction-related audit objectives to balance-related and presentation and disclosure-related audit objectives. And what this really means is that tests of details of balances are primarily done to reduce your detection risk to a level that you as the auditor are comfortable with. We're going to do plenty of tests of details. We're going to look at bank recs, accounts payable reconciliations, AR reconciliations. Why? Because we want to make sure that the risk that we won't detect something is as minimal as possible. Objective 6. Understand key evidence-related terms. So, a summary of the key evidence-related terms are as follows. Phases of the audit process. What objectives are we looking to accomplish? The types of tests, the decisions, and the types of evidence. Let's take a look at Table 13.6 to kind of show you how this works. We plan and design an audit approach. We then look at the types of tests, so risk assessment procedures. What decisions are we going to be doing? Audit procedures and timing. What types of evidence? Inspection, inquiries, and analytical procedures. In the second phase, performing test of controls and substantive tests, what are the transactions that we're looking to accomplish? Occurrence, completeness, classification, to name a few. What type of test do we want to do? Well, I want to do some substantive tests. Audit procedures, sample size, items to select, and timing. The type of evidence: inspection, observation, inquiries of the client, reperformance, and recalculation. Phase 3. Performing substantive analytical procedures and tests of details of balances. We look at the balance-related objectives and what we're looking to accomplish. Type of test, substantive analytic, evidence decisions, audit procedures and timing, type of evidence, physical examination, confirmation, inspection, inquiries of client, reperformance, analytical procedures, and recalc. Phase 4. Complete the audit and issue an audit report. Presentation and disclosure related objectives, occurrence and rights and obligations, completeness, accuracy and valuation, classification and understandability. What types of tests? Test of details of balances. Objective 7. Integrate the 4 phases of the audit process. So as a summary, as we just saw before, you have 4 phases. Planning and designing the audit approach, perform test of controls and substantive tests of transactions, perform substantive analytical procedures and tests of details of balances. Phase 4, complete the audit and issue an audit report, where you're performing additional tests for presentation and disclosure, accumulating evidence, issuing the report, and communicating with the audit committee. And that concludes our discussion on Chapter 13, Overall Strategy and Audit Program. We recommend you read the chapter and listen to the video again before completing any and all assignments you may have. Thank you, and all the best.